Welcome back. The market was driven most of the week by trade and tariff developments. I spoke with Larry Kudlow, the president's top economic advisor, about where this is going.
The essential point that the president has been working on for quite some time, and you heard Sarah Sanders refer to it, you've got these unfair trading practices. By the way, in WTO terms, many of them are illegal trading practices. And, you know the list. It's stealing technology or transferring technology, stealing our intellectual property rights. They have high tariffs. They've got main barriers. There's not near enough market access for, foreign countries like the USA. So all that stuff has got to be discussed, negotiated, and eventually changed. And there is a process here. There's going to be some back and forth, but there's also some negotiations, and we may talk about that. But that's the key point. Look, end of the day, China's unfair and illegal trading actions are damaging to economic growth for the U.S., for China, and the rest of the world.
Yeah.
They are preventing a much stronger global economy, and they are doing damage to American exports. And, the president, he's the first guy with the backbone in decades, Maria, to actually go after it. Not just, whisper it, but to go after it with at least preliminary actions.
Well, you're right. I mean, we all get this on China because we know that they've been stealing our intellectual property for a long time and putting all these restrictions in place. Do you want to see the same kinds of restrictions in terms of China being allowed to invest in American industries? I mean, I know that there are like 10 industries in China that are off limits. They won't allow an American business to own more than 49% of a joint venture. Is that the kind of restrictions you'd like to see here in America?
Well, look, I don't like to see restrictions, but as part of this potential deal, and I think we are going to get a deal over a period of time, yes, I think these barriers will come down on both sides. And that's a key point from the president. He understands perfectly well that economies do better when trading barriers are reduced rather than raised. The tit-for-tat idea really doesn't work in economic terms over a period of time. That includes market openings, and as you noted, that includes investment decisions as well. At the moment, the USA is properly wary of China. And, of course, the technology transfers and the hacking and the cyberspace hacking is part of that. Now, that could be changed and fixed. I hope it will.
Right.
But all that's on the table.
Larry, I always refer to you as a growth guy. You always, as long as I know you, have focused on economic growth, supply-side economics, Reagan White House. So let me ask you what's possible. Knowing what the president has already put in place in terms of this tax cut reform, as well as the rollback in regulations, we're talking about 2.9, 2.7% growth so far. What kind of growth number would you like to see or is possible for 18 and 19, Larry?
Look, I think it's possible, Maria, to be in the 3 to 4% growth zone. The last 3 quarters, which is really Trump's first year in office, the last 3 quarters we've picked up from under 2 to 3.1% at an annual rate. Now, 3 quarters is not a lifetime. I get that, but it's a good start. And as I'm sure you know, you could look at the ISM numbers that came out this week. They're booming. Confidence is booming, both business and consumers. All that looks good. CapEx, investment spending, which is part of the tax cut design, has also picked up steam. I think the factory orders showed core CapEx, core investment spending, Maria, up to around 9–10% year on year. So that's good. We're moving forward in the right direction. A lot of good things happening.
Could we get to 5% in the coming couple of years in the U.S.?
We could. It might not be forever, but, we've had such a slow recovery, so-called. It's really a growth recession during the Obama years, not a real recovery. So, yeah, will we get 5% forever? No. But there's a catch-up here. Any economist will show you long-term trend line for real GDP versus the actual now. We're like several $1 trillion below where we should be based on the long-term trend lines. I want to get back to that full potential.